What's up everyone, welcome back to another video. This is Dan here once again, and this video is going to be a quick market update before the week starts. We got to check out all the technical developments. Before we do that, though, I still have that exciting news. The MOOMOO trading app is still celebrating their 10th anniversary. They're still giving away free shares. Basically, you can get one free share and a $10 cash coupon by signing up to trade on the MOOMOO app and depositing any amount of money. They're doing this as a special bonus for the 10th anniversary, but the promotion goes further. I'm going to give more details about this later, but basically you can get up to 20 free shares worth up to $2,000 for depositing your own money into your own account, man. It's completely no cost to you. I'll be giving more details about that later in this video, or you can click the promotional video somewhere up there on the screen to get more details about that. Or if you just want to get your free shares now, then click the link in the description or click the link in the top comment in the comment section to get your free shares. And other than that, let's jump right into the video. Let's see what's going on in the charts before the start of this next week, right? All right, now the first few things I want to go over are we're going to look at the technical picture. I want to check out all the technical developments, see why the end of last week might have looked a little ugly to everyone holding long positions. Last week generally looked ugly for anyone holding those long positions after the past couple months of a rally here, right? But I just highlighted the 200-day moving average. This is a very crucial moving average. If you don't follow moving averages, you should at least know about the 200-day or the 200-week moving average. A lot of traders, a lot of investors around the world use this moving average to decide if we're in a bear market or in a bull market. If we're below it, we're in a bear market. If we're above it, we're in a bull market, right? That's how some investors act. And you can see that we had a reaction in the past. Some selling occurred at the 200-day moving average. People thought we were going to stay in the bear market, and they brought the price down with it. That could possibly happen right now. I'm really not sure. I don't think all of the economic data that came out has been bad enough to warrant another giant leg down in this bear market. Everyone's calling for another huge leg down, like a recession-like leg down. I don't see that coming yet, not until the data gets too bad, because right now the model is bad news is good news. The Fed wants to kill inflation, so any of these numbers showing negative growth, that's also negative for inflation. So, the equity traders thinking, let's get into these equities, let's front run it before the Fed stops increasing interest rates or pivots, right? That's just my opinion, but as a technical trader, you got to watch this 200-day moving average. The sellers could step in here and flip it over just like they did in the past, like I'm pointing out right here. All right, here is another technical development. This is a trending resistance, a downward trending resistance that started way over here when Putin started amassing his troops, or when he invaded. One of those situations started this bear market. And you can see the resistance. We have had quite a few reversals here. It looks like we might be flipping over here as well. Man, getting above this would have looked like we are out of the bear market. This downtrend is over. We're at least going to consolidate before going up, or maybe we'll just start into a bull market immediately. Who knows? But at the moment, as of last week, they were selling off of that resistance line, so we got to go off of what's happening. They're selling. The selling's not super crazy so far. We'll see how next week goes, but keep an eye on this 200-day moving average and this bear market resistance. You could see how it's been holding us down for, we've had rejections at these points. You got to follow the price action, and right now it's rejecting, but let's take a closer look and see. This uptrend doesn't look like it's completely over. Let's zoom into that thing, see what we're looking at. This is the uptrend we've been in for quite some time. It started off at the beginning of October, I believe. It looked like we were traveling up in this price channel here. And then the price seems like it has somewhat of a little topping pattern going on. And then we broke below support. And then after we broke support, then it looked like this price wedge was forming. And as you can see, the selling's still happening all the way into close on Friday. And it looks like the price wants to break down below support of this price wedge. That would be short-term bullish, or I'm sorry, short-term bearish, I should say. And if this selling continues, this short-term bearishness would coincide perfectly with the rejection off of that bear market resistance that I highlighted earlier, right? But maybe it's just me. I don't see that economic data being so bad. Inflation has been trending down. All the PPI data, all the inflation data has been trending down still, technically speaking. Unemployment numbers, the 4-week average has been trending up, so everything that Powell wants is kind of coming in line. But if the market sells off, it's going to be from recession fears at this point. Or if not recession, just very slow global growth, like a very soft landing, right? Or somewhat hard. Either way, whatever the reason is in the market, whatever the market makers pair the orders, make the price go up and down, who knows? We just got to follow the trend, right? And right now it looks like this uptrend that we've had the past few months is about to end, but we'll see. Next week is what's going to matter. But if you have been holding a long position for the past several months since October, I think it'd be completely safe to cover your position. You don't have to get completely out of it if you don't want to. At least secure some of that profit, right? And I quickly want to go back to this consolidation pattern. It looks like the price doesn't know which way it's wants to go. It's not making new lows. It did briefly make a new high, came right back down into this range, this channel, if you will. And I honestly think investors don't know which way they want the market to go, man. They're waiting for some really bad economic data, something, man. China reopening gave us a boost, but it's really only working for Chinese equities. They're actually doing amazing. I'll go over that in a bit. But the market is near that bear market resistance, the 200-day moving average, where it flipped over here. I really don't think it knows where it wants to go until the Fed says something, or, man, who knows? And to be quite honest, all of this is more than likely going to depend on the economic data, whether we break above, get out of this bear market, or if we just reject that 200-day moving average and start selling off again like we did last time. So let's see what economic data is coming out. We've got some big stuff next week. I should point out Monday at noon, man, we got a 10-year note auction. That's my time zone there. I don't know when it's going to be in your time zone, but the 10-year Treasury notes, man, if investors are buying that up, then they think inflation is going to persist over the next 10 years. If they start selling the 10-year at this auction, if they bid lower, then that's a good sign for inflation not going to last very long, or at least investors anticipating inflation slowing down on the 10-year time frame at least. And that's a big time frame when you're talking about the Fed and increasing interest rates or pivoting. Then the 10-year note is something they watch very closely. But more importantly, Tuesday, CPI numbers coming out, man. They're coming out all over the place. 7:30 in the morning, bright and early on Tuesday. This will surely move markets. This is inflation data, and this is what the Fed's watching. And the market's super sensitive to inflation data over this past whole year, really. So you got to pay attention to CPI for sure. That's a big number. We're going to find out if it's going to put us back in a bear market. Holy cow. We also have the 30-year bond auction at noon on Tuesday after CPI data, several hours after CPI data. And similar to the 10-year data, and if investors are buying up the 30-year bond, then that's, or if they're selling it off, actually, I should say, that'll be scary, because then they see inflation persisting over the next 30 years. That's essentially what that means if they are selling off bonds. I should have said that about the 10-year. When they're selling the 10-year, then they expect inflation to persist. I got it flip-flopped, so let me correct that. But, again, similar to the 30-year bond auction, if you see them selling those 30-year bonds and they expect inflation to persist, they expect the Fed to increase interest rates even further, which will give them a higher yield on 30-year bonds, theoretically, if they sold off and waited for the Fed to increase interest rates, right? So keep an eye on that. And the most important thing by far next week is Wednesday. We're going to hear from Jay Powell himself, and he's going to give us his interest rate decision. Everyone knows it's going to be a 50 basis point hike, so I don't know what's really going to come of this. We got to pay attention to his comments, whatever he's saying. They've got a forecast for interest rates into the future, but they did that last time, and then after about a week, they were like, oh, that forecast is out of date. Man, it's like a week old. That was crazy. But pay attention to what he says and what the reporters ask him, the Q&A section of that interest rate decision, man. Sometimes you get some moves off the Q&A. Those reporters can really make the market move, right? And that's basically the most important thing on economic data next Wednesday, so we don't need to go any further on this economic data subject right here. Now, everyone, I quickly want to go over the Chinese markets because they have really been ripping lately. There's rumors of Chinese government easing COVID tensions, possibly reopening very soon. Living with COVID is the verbiage that they're using. And anyways, check it out. The Hang Seng Index has rocketed over 30% in the past couple months. These rumors have really sent it on a huge rally. But just like in the American equity markets, all the major indices will SPY at least. It's right by that 200-day moving average, so watch for the sellers to step in. If this is a true easing of COVID, if the government is really planning on opening up really soon, then I do not think we should sell here. I mean, you might get a little profit take from the massive rally. There's always a little profit takers, the short-term swing traders. They like to take profit from time to time. So you might get selling here, but if we're really reopening in China, then that is super bullish, right? This could possibly be like the chance of a lifetime to invest in the Chinese markets and make some massive gains like they can produce. And that's basically all I've got for the update, and that's a good segue actually, since the Hong Kong markets are on a historic rally, man. The MOOMOO trading platform lets you trade the Hong Kong markets. I don't know any other trading platform that lets you trade Hong Kong stocks. So let me go ahead and explain that promotion for you. Let's get into that right now. All right, everyone, check it out. This is how the promotion works. It's super simple, super straightforward. MOOMOO is being very generous with this promotional offer. Now, here's how it works. All you have to do is open an account with MOOMOO, deposit any amount of money. You get one free stock, and you get a $10 cashback coupon. That $10 cashback coupon essentially makes your first $10 purchase in the stock market free. MOOMOO gives you your money back for that $10. And the promotion goes further. If you deposit $100, you get up to 9 more free shares. It was 4 free shares. They increased it to 9. That is an amazing increase. And also, if you deposit $1,000, you get 10 more free shares. Now, that's a total of 20 free shares up to a value of $2,000. And if you deposit the full amount of that $1,000, you get one entry into a sweepstakes where you could potentially win $60,000. Now, check it out. Basically, you open an account, your own account, you deposit your own money into your own account, and then MOOMOO just gives you up to 20 free shares. That's amazing. You could potentially get $2,000 more in your own account, right? And you could also win up to $60,000. This is an amazing offer, guys. Y'all got to take advantage of this. So go ahead and click the links, right? Alright guys, there you have it. As you can see, MOOMOO is being very generous. They're giving away tons of free stuff, man. So go ahead and click the links in the description or in the comments to get your free shares. And other than that, definitely hit the like, leave a comment of anything, and hit the subscription button. I would really appreciate it, guys. And that's about it. I'll see y'all on the next video.